Imagine this, the Roaring Twenties, a decade of unprecedented prosperity. Flappers, dancing, jazz music spilling out of clubs, and the stock market soaring to dizzying heights. It felt like the party would never end. But on October 29, 1929, a day that would be forever known as Black Tuesday, the music stopped. The stock market crashed, wiping out fortunes overnight and triggering the longest and most severe economic downturn in modern history, the Great Depression. What exactly happened? It wasn't just one single event. Think of it like a perfect storm. For years, people were buying stocks on credit, a practice called buying on margin. They were essentially gambling with borrowed money, betting that the market would just keep going up. At the same time, factories were producing more goods than people could actually buy, and farmers were struggling with debt and falling crop prices. The economic foundations were shaky, and the stock market crash was the tremor that brought the whole house down. Suddenly, banks started failing by the thousands, taking people's life savings with them. Without access to money, businesses couldn't pay their employees and were forced to shut down. This created a devastating domino effect. By 1933, nearly 1 in every 4 American workers was unemployed. That's about 15 million people with no way to support their families. Life during the Depression was incredibly hard. People lost their homes and were forced into shantytowns. They bitterly nicknamed Hoovervilles after the president at the time, Herbert Hoover. Long lines of desperate people waiting for a bowl of soup or a piece of bread at soup kitchens became a common sight. In the rural heartland, a severe drought turned fertile farmland into a barren dust bowl, forcing countless families to pack up everything they owned and head west in search of work. Becoming migrant laborers in places like California, their stories of hardship and resilience were famously captured in John Steinbeck's novel, The Grapes of Wrath. So how did it end? In 1932, America elected a new president, Franklin Delano Roosevelt, who promised a new deal for the American people. FDR rolled out a series of ambitious programs and reforms designed to provide relief, recovery, and reform. The government created jobs through massive public works projects, like building dams, bridges, and parks. New regulations were put in place to stabilize the banks and the stock market to prevent a similar crisis from happening again. Programs like Social Security were established, creating a safety net for the elderly, the unemployed, and the disabled. While the New Deal helped alleviate some of the suffering, it wasn't a magic bullet. The economy didn't fully recover until the United States entered World War II. The massive industrial production needed for the war effort finally kick-started the economy and brought unemployment rates back down. The Great Depression was a defining chapter in American history. It reshaped the role of government in the economy and in people's lives. It taught us painful but valuable lessons about financial regulation, social responsibility, and the incredible resilience of the human spirit in the face of overwhelming adversity. It is a powerful reminder of how interconnected our world is and why understanding our history is so crucial. Thanks for watching. If you found this video interesting, please give it a thumbs up and subscribe for more deep dives into history. Let us know in the comments what historical event you'd like us to cover next.